Hello and welcome to Trading the Trend. My name is James Boyd. We welcome you here today as the VIX has pushed to the upside. That's what we really want to know. Where's the VIX? This morning we saw the VIX kind of slowly climb to the upside. Gold, silver pushing as well. My gosh. Look at the weekly chart of gold and silver. That tells you pretty much what you want to know. You'll see it in just a sec. Now, just real quick, we did have a question on AM. We will come to that. I just want to let you know, Greg, I did see your question. So today's date, October 16th, and you can follow me right on X. Do post educational content there daily. My handle, at James Boyd CS. And also, just real quick as we get going, we also like to welcome Austin, Josh, Rick, Richard, Chris B, and many others. Welcome to all. Wiley, hello to you. Okay. And just checking on one thing. And we also have Connie Hill in the chat. So we welcome her as well. Now, just real quick, Connie will be watching for questions, and so will I. We'll get to those momentarily. Also, remember that when we talk about stocks and options, options carry a high level of risk and are not suitable for all investors. The information provided here is for general informational purposes only. Also, when we talk about our examples, we will do those in the Paid Money software application. And when we also talk about investing, investing involves risk, including loss of principal. And also, when we talk about short options, those can be assigned at any time up to the expiration, regardless of the in-the-money amount. That does not happen in paper trading, okay? But real, it could. Be aware of that. And also remember that today we're going to take a look at where are the indexes. We want to start with the VIX right off. Then we'll talk about some of the commodities, and want to kind of with that, kind of go into the question regarding AEM. And we did do an example of AEM, NEM, so it fit right in. And then with that, we'll talk about some bearish positions that we did last week. Talk about those, good, bad. And then we'll talk about some new potential strategies with maybe some different stocks that we normally don't talk about. Let's first off take a look at this chart, okay? So when you're kind of watching the market throughout the day, right? When you're watching the market throughout the day, and if you're kind of seeing the VIX rise, you pretty much know that, let's say, the portfolio balance is probably being pressed down, okay? We probably know that the indexes are dropping, right? There's been this tit for tat, such as China is actually not sharing their minerals with us. China actually says back, we're open to discussion, right? And we've kind of had this little increase of volatility as of lately. Tack on top that we actually have government shutdown. I don't even know what day we're in. So there's kind of a little escalation of volatility here. And what you're going to notice is whenever we get these volatility rise, the volatility spiking or rising, you get some stocks that are actually pulling back. Now, in the last couple of days, we've been kind of talking about trying to be more neutral volatility to some degree, callers. If we're being bullish, the investor might want to consider strategies that are not as bullish as just straight stock. Why? Well, because you get more volatility, you're more sensitive to direction. Okay. Now, in this environment where you see a higher volatility, some people like verticals, and that's been a theme. We'll continue to talk about that. Now, if we take a look at, let's say, the VIX, don't have anything to say besides it did actually it's held the shorter term moving average. Okay. And that has stayed green. So there's still a little pressure here, still. The chart that we'll actually look at, which is not unusual here, the GC, the gold. And we're taking a look at the price of gold here. This chart, I mean, just a couple days ago, 4 days ago to be exact, on the 13th, we were at 4,000. Gold has gone up, what, 8% or so in like 4 days? Who's counting? 7%? Okay. This type of move in gold, I've never seen it in 25 plus years, ever. Okay. Clearly, there's some people that are riding the trend or a trend, and they're really, if stocks are not actually going to give the directional move, they want to maybe play something that's tracking a price of something. Now, it's not just on the daily chart. When you look at this actually on the weekly chart, that is not normal to see a candle that has the height of the Eiffel Tower, which is pretty high if you're there in person. So that's the weekly chart. Now, it's not just this, it's not just that. You actually see the silver, and that's even like the height of that candle is even, it's a monster, okay? And so, again, if this is the nice thing, The investor does not have to invest in stocks. They can invest in something where they're trying to track the price, or something that's correlated to the price of something, okay? Like we'll actually look at in just a second, like AM, NEM, et cetera, WPM as well. But when you take a look at the indexes, okay, when we look at the Dow Jones, we're still trading inside that volatile candle which we saw on Friday. We're still trading inside on the S&P, the candle that we actually saw on Friday. Now, we've actually had some attempts to rally, but there's kind of been this back and forth between the U.S. and China, where the market participants have not taken it above Friday's open price. The key word is yet. Now, the one that actually did go up above that high, if we take a look, where's the Russell? There it is. The Russell actually went above the brand new, above that high. Checking back here today, can that get a bounce? That crossover was yesterday. Can it get a push? Okay. Now, let's take a quick look at, before we look at the question, just real quick on NASDAQ. Has NASDAQ actually gotten above Friday's high? No. If we take a look at the stocks, you actually say semiconductors have actually been the strongest group that I'm aware of in the tech space. Can anyone tell us a stock in the semiconductors that has been leading here today? I'll give you a hint. You can buy a vowel, U, and then you fill in what the first letter is. It's 2 letters, okay? What is it? Now, I want to kind of take a look at the question, okay? So there was a question regarding, now, when you look at, let's say, gold, okay, you just run a basic search, you could see that NEM, AM, they're probably the highest price dollar stocks that have some liquidity, okay? And the question was from Greg. Greg is a contested caller. What does that even mean? Has shares, right? Someone sold the call, right? And now if the stock goes to the upside, let's take a look at the position. And what I'm going to do is let's pull this up. So if we say a contested caller, that just means it's going above that short strike price. And so let me kind of give you a little flavor more of what we're talking about here, okay? Now, we did the example when markets kind of drop. Sometimes what happens is a lot of investors are like, I'm nervous to get in anything. They're already a stock buyer, okay? Now, I'm sitting back in my chair because I still got the pinched nerve in my neck. it's rough. I'd almost like to wear a collar at this point. Now, but I don't have one. Now, got 100 shares of stock. If the investor knew the future, if they did, they'd be up $833 if they knew the future, but we didn't know the future. So what happened is that we sold the 95 call. Now, where's the stock now? Well, the stock's at 97, okay? Here's the strike. We're 1 strike in the money. Now, normally, if you're kind of looking at this, and this goes back to the management, okay? So first off, we're only 1 strike in the money, barely, and there's a 60 delta. I'm not really thinking here that we probably have a good percent of this maximum gain. Now, if you look at the like a risk profile diagram, there's a max gain and there's a max loss. So how do you manage the trade? Pretty simple, okay? You ask yourself, what is the maximum gain? What is it? Well, we bought the shares at 89.25. Type it in right here, 89.25. Do the basic math. Now, here's the deal. If you want to be an investor, you better be able to do some basic math. And the investor can make up to $95. Again, basic math. And so on the shares, it's $575. What do I see immediately? Well, how much do we actually have? We have $209. Are we anywhere near $575? No. If I said, hey, 209 divided by, okay, 575, I think we're probably only at like, say, 37-ish% if I was guessing. Now, the question that what we don't know is, was there a credit or a debit? And if you look at, let's say, we collected 340, we bought the put for 335, there was a nickel. I'm not even going to change our numbers. It's pretty much a zero-cost collar. So the trade is pretty much a cover call when the stock goes to the upside, and it's 575 is the maximum gain. If I pulled up the calculator and said, look, we had $209, 575, I said 37%. Let's see what we got. We're close, 36.6. 36.3, excuse me. So in this case, what you're now going to notice is this is still going. So if we're in a situation, if we were in a vertical, like a long call vertical, a short put vertical, a cash secured put, a collar strategy, the collar strategy is like a vertical. So if someone said, well, what is the paper money account going to do in this position? The answer is nothing. Okay. Now, not going to touch the collar piece. Why? There's not enough money. Okay. Now, if the investor said, well, could I just try to take the $200 and I just want to ring the register? They could buy the call back, sell the put, and sell the shares. Okay. But if the investor says, no, I'm actually going for a bigger percent of that maximum gain, the paper money account's not going to do anything. Okay. Now, one of the comments is here regarding is let theta burn after earnings. Here's the problem. When you do, let's say, a synthetic, I'm not really sure how much theta you're really going to get. When we talk about selling a call, 9. And what you're now going to see is on the put side, you're going to see that 6. So is there a slight differential there? Yeah, it's about 3 cents. 9 cents, you collect that, ish, and you actually pay that, ish. So what you're now going to notice is there's about 3 cents or $3 a contract. It's slightly theta positive. Why is it even like that? It's because we bought a lower strike put. Normally, that put is going to be closer, the strike is going to be closer to the short call, okay? So a lot of times I don't even look at what the theta is because usually that theta differential is not much. Does that make sense? Any question on that? Okay, so do you understand this position, we're really managing like a vertical, okay? The stock goes to the upside, the position really is like a covered call. If the stock goes to the downside, the position is really like a protected put. Okay? All right, now, how many more days do we have left? Well, we got 36 days left. So it's not like this is on the doorstep of earnings here. Okay? Question from Colin is, how do we change our stops to lock in profits in this volatile market? All right, so let's go back to a position just real quick. So let's say we actually said, okay, I have shares. So let's kind of use this example given, okay? Let's say the investor said, James, I have a position, okay? And this can be a twofold, there's 2 questions on this, okay? So let's say someone said, James, I want to try to lock in some profits, okay? And I want to get out. So I'm going to look at a long synthetic, which is a long call and a short put, but I also look at a covered call, okay? Now, first, let's do the covered call because I'm thinking that the person that asked me this question might be doing stock, okay? So first off, kind of what we've been talking about is selling calls to create premiums. The delta position, 60.99, that's what it was purchased for, is at 60.44. The stock position is at $55. Well, the call is up $291. Sold the call for $305, it's now at 14 cents. Had the paper money account not sold the call, the position overall would be down. Okay? Welcome to time decay. Now, on this, let's say the investor said, well, I want to kind of adjust my stop more closely. Well, if I did on cover call, right click, create closing order, sell. Now, here's the deal. We're not selling the cover call like right this second. We're putting a pending order. We're saying if it goes at or below to try to lock in profits, dangerous word to say, lock in, because when you set a conditional order or a stop, that's not locking in anything. It's an order to sell. The only way we really lock in something is you buy puts, okay? Now, we're going to create closing order or you do a collar. We click on the create closing order and we're going to come down to limit, market, dated GTC, click on the gear. So all we did there is go limit to a market, check, dated GTC, check, and now we click on that gear. Now we're just going to say, look, if it goes below $60, get me out, okay? So how do you put that in? Delta, click right below symbol, it comes up delta automatically. Method, automatically comes up the mark. Didn't even have to change anything. And now what I'm going to type in is $60. Now the comment was, how do I lock in a profit? Okay, well, delta mark less or equal to $60. And what is it going to try to do? It's going to sell those shares. It's going to buy the callback, then sell the shares. Now, if we're talking about just a stock position, how do you adjust the stop loss? You simply right click on that and say create closing order for the stop. That's if the investor was only doing a stock position, wanted to set a stop, they could just go with stop. Now, the question was also asked to me is, do you use trailing stops? I don't use trailing stops. Why? Because we manually look at the positions and we're manually adjusting the stops ourselves. So you're thinking that the trailing stop is moving intraday if the highs are getting higher, but we're actually manually looking at the charts and then moving up the stops. It's the same idea, but a trailing stop, the platform is doing it for you. With the way I'm talking about it is we're actually physically looking at the chart. Okay, now, why did I didn't take this trade all the way through? The reason why I didn't take this trade all the way through is because this expires tomorrow. Okay, now we got to ask ourselves the question, is Delta still upward trending? Let's pull up the chart. Let's take a quick peek. Is Delta still upward trending? I mean, is it bearish? How many of you are not yet willing to say that this is bearish? I can't say it's bearish. It kind of looks like it's still puckered up against resistance. I don't see it's bearish. I see it went down for the day. Now, what some investors might do is they might say, James, I like the shares. Okay. Now, what happened is we bought those shares for about $60.99. Okay. Now, if we can grab the $292, it's like theoretically lowering the average price of the shares to $58.07. The $60.99 is what we bought the stock for there. The $292 is the call premium. Now, why do you say theoretically? Well, because if you look at your itemized statement, you'll actually see that you still own the shares for $60.99. That's what you bought the shares for, okay? The $292 is option premium, okay? But in your mind, it's kind of like you own the shares at $58.07. Now, if the investor said, James, I'm not ready to get rid of these shares, but with this call expiring tomorrow, I'm just going to roll that option. Think of rolling like exchanging. We're going to say, look, let's buy this back for, let's say, 14 cents or near there. And then you're going to see that we're buying back that option there, 62 call. And then what we're going to do is we're going to go down the road in time and say, could we try to sell another option with a delta of 30 to 40? So, Crispy, I agree with you, okay? On Delta, I don't see anything that looks so bearish. Kind of looks like it's kind of hanging out there, okay? Now, if someone said, well, how do we change the expiration? Click on that top line. We're going to go to, let's say, the 21st of November, check. And then what we're going to do is, so we're rolling out in time, rolling up in strike. Now, wait. Why do you sell the 65? Well, that's the delta between 30 to 40. If you sell the delta between 30 to 40, you're trying to actually have more upside. If you said, James, I want to do the same strike, but out in time, you're kind of being a little bit more conservative and wanting some bigger premium to try to protect the shares of stock to a degree. The only protection on the cover call is the premium. That's it. Okay? Now, Bill also says something that I was going to say, but I was waiting for Bill to say something. Thank you, Bill. Okay? Yeah, lower oil prices you think might help a little bit. Speaking of that, go look at crude oil. What, crude 58 or so? I mean, my family is going to Oklahoma at Christmas time. They are. Me and Jats are staying home. Why? I don't need a vacation. I'm already on vacation, okay? So the biggest actually thing is just to go from Salt Lake City to Oklahoma, I think they're like $550. I'm like, wait, I could go to Hawaii, okay? What you're going to find out is a lot of these airlines, they're not necessarily cutting prices. I don't know if you've seen that, but my goodness alive. I mean, you got oil down here. Look at the price, and I agree with you, Bill. When you look at the price of crude oil, it's in a downtrend, and it's actually now down to 57. Now, again, crude oil prices and jet fuel prices obviously different, But you're thinking if those prices actually go lower, could some of the airlines and trucks get a little push to the upside? Now, it's not all about fuel. You actually need literally demand from people flying, but it is an input cost, okay? All right, good. Now, so let's go back to this just real quick. We're going to roll the call. Now, by the way, when we did this, we talked about how do you maybe set a pending order to get out a cover call? How do you just adjust a stop loss on a stock position? And then we said, well, since we're on it, since we have expiration tomorrow, we reviewed the stock position, how about we roll the call, okay? And so that is more pertinent to this position, okay? Now, the comment, so let's go back to just real quick. Yeah, so the comment was, is there a way to track, let's say, now, by the way, there's, if you go over, let's do this. Let's go to Cisco for just a moment, okay, Cisco. And if you look at, let's say, the PL Open, if you click on that right there, it's gonna show any trades that you've done of Cisco. This is gonna show what it was purchased for, okay? Now, there's some other tools to kind of see, now if you had bought Cisco multiple times, and I'll just do this just because there's a question on this, okay? So if I look at Cisco, what I'm gonna do just for this purpose, I'm only gonna buy a share, okay? So if I buy a share, what actually happens is, let's try to get that to fill as soon as possible. Price moved a little bit on us, okay, there it is. Now when I click on, let's say, Cisco, what it's really gonna do is when I click on it, it's now gonna show, I know what's happened. There we go. Okay, any position, this one, and this one. So it's gonna show the prices for each, how many shares, what was the stock price when you bought it, shares, stock price, and it's gonna give you the average price, okay? Now, if you wanna kind of get more detailed of that, you could dig in there, but I'm gonna start off with that answer first, okay? Now, let's kind of go back to just real quick, one of the other questions, okay? The other questions we had the other day was, James, wonder if you were long a synthetic and you wanted to protect the downside, just kind of like we do with, let's say, a stock position. Now, remember this, if you look at, let's say, Walmart and you say, look, I'm a little concerned, or let's say hypothetically Walmart has earnings tomorrow. Well, remember, if you take a look at the delta of this position, it's 98, okay? Now, if we look at this, how do you actually put on a caller in this case? Well, you already have the $100 call, and the stock is at 106. Now, what you could try to do is you could try to sell maybe a strike price like 107, 108, 109, and so on. We'd have to see what strike, are they in 250s? Are they every dollar? I'm speculating in a dollar. The downside is the 100. Now, you could try to buy a put at, let's say, what? Anything below 106. You could try to do 105, 104, 103, 102, and so on. The thing we got to be careful is we can't sell the 100 call, because why? Because the paid money count is long. You sell the $100 call, it's going to get you out of the position. You buy the $100 put, it's going to get you out of the position. So we got to make sure whatever we sell and buy, that it's not the 100s, okay? Now, here's the key. We want them to be in the same expiration month, 21st of November. So let's show you how we do this. Now, this is kind of be like, wow, they didn't think it was going to be like that easy. But if we go bring up Walmart just real quick, okay? Now, when I was thinking, hey, the strikes are going to be in dollar increments. On the monthly options, they are not. However, could the weekly options be? There they are. Now, we're not against weekly options. They just better be liquid, okay? Now, I'm not going to go there, but there is some liquidity here. There. I'm going to go and actually look and say, could we try to sell the 110? The 110 strike has a delta 39 on the monthly options. We're going to right click on this. Okay, right click on the bid of the call. Now tell me where to go next. Where do we go next? If I want to collar the long synthetic, how do we do it? How do we do it? I'm going to go to sell, and then I'm going to go right to where? Collar synthetic. Okay, now, before we go there, there was another question that was brought up in the survey the other day, and I'm just addressing it now. I'm going to put this trade, let me just, let's analyze the trade. And I just want to kind of show you what this position looked like. When we got into this position, let's kind of show what it looked like. Now I'm going back to kind of see what was the debit there. That debit on that, it was about, what was it? 550. So if I go back and type in, let's say 550, okay? So now when I actually take a look at this, it's showing, if I look at this, let's only have checked, okay, the position, okay? So what you're now going to notice is, here's the stock price now. The delta of the position is 98. If we're collaring, what are we trying to do? We're trying to make the delta position or the delta number lower to have less sensitivity to direction. We're a little concerned that it might consolidate and or pull back. Now, and you could also say to a degree, we are trying to lock in profits. How? Well, because we have a right to sell the shares at the long put strike from now into expiration. Now, when we apply the collar on top, so if we sell the 110 and then we buy the 100, am I doing that right? Tell me no. If I buy the 100, what did I just do? You just got out of your short put position. Okay, so that's not the one. Now, James, could we maybe in this case buy the 97.5? Well, if we look at the 97.5, it has a lower strike. Now, what is the pro, two of them, about doing that? Well, if you buy the farther out of the money put, it costs less. And if it costs less, you actually have a greater chance to have a credit. And you're going to see that there. If you actually did that, is your position more bullish or less bullish than if we actually bought, let's say, the 105? Well, if you buy the 105, it costs more. You're probably going to have a debit, and you're probably going to have a situation where it's not, if you did the 105, it's more protective. Why? Because you're actually buying the put at 105. I mean, the shares are at 106. You have a right to sell the shares at 105. Now, if I did this, we're going to do the 97.5. Let's look and see what this does to the Analyze tab. Now, kind of like what I expected and you expected. When we layer on top, let's show the synthetic. It looks like a stock position, diagonal line. Overlay the collar on top. There she is. Max gain, max loss. Okay, if the stock actually went above that short strike, the 110, okay? I was thinking 210 for some reason for Walmart. Pardon me. I was wanting the stock to be at 210. Now, here's the deal. Now, let's hold on. Okay, it is. Okay, sorry, I was always thinking ahead there. Made myself laugh. Let me control myself. That 292, that's the profit for the position theoretically if the stock were to go up to that price level of, follow my hand, 110. If the stock actually were to close below that, let's say 97-ish, you're going to see what that loss could be. Okay? Now, if we take, and by the way, you could run the kind of the numbers on that. Okay? Now, the one thing we got to remember is just really quick, if I go back and we look at this trade, you always got to remember you could be assigned to buy the shares at that short put strike. Okay, so what does that really mean? You have to buy the shares at $100 and 100 shares. If the paper money account or real money, if it was assigned, does the investor have to hold on to the shares? No. Could try to sell them, check liquidity. Okay, they could keep them, they could cover call the position and so on. They are their shares. You wouldn't ever sell a put unless you did not mind in owning the shares of stock. So we just want to always know if we sell that in the paper money account, that is an obligation. Okay. Now, and if we go confirm and send, now what you're going to see in this case, it says illegal. That probably tells me that we have a stop loss on this. I'll go back, put that right there. Let's go cancel that order. Let's go back, confirm send. There it is. So now when we actually do this, let's just confirm we're selling the 110, okay? And then we're buying the 97.5. Now what I'm going to do is I'm going to put this in that section right there, and let's overlay it on top. Now, if we looked at this and said, what do we think the delta is going to be when we put this position on? I'm going to speculate about 40, okay? When we selling the call right there, it's a 40 delta. We buy the put right there, it's 17 delta. So it should decrease the delta by about 47. If we drop it by 47, it's going to be a little higher than I thought. The delta is going to really be about 51 if my math is any good, okay? And I think, heck, I was wrong. I said 40, it's at 42. I was off by 10 when I said that before. That's why I was pulling up the calculator. It was actually 57, okay? I said 47-ish. It's actually 57, so the delta is going to be 40. So now when you go look at the diagram, okay? When you go look at the diagram, now you're going to see if this stock actually goes to the left, we're trying to give back the profits more slowly. Now, how many of you ever had that where I was doing really well until the market did X, Y, Z? That's the point, okay? Now, I don't want to beat this point to death, but if you're a stock investor only and the stock goes down $1 and you have 100 shares, you're down $100, down two, down $200. And by the way, these $1, $2, $3, $4, $5 down moves, they could actually happen in minutes, seconds, okay? Now, if you take a look at this, this is going to be the stock position. So if it goes down $1, $2, $3, $4, $5, you have 100 shares, it's down $500. If you're so concerned about the news and you do have 100 shares, now what you're going to see in this case is if it goes down, if that delta, let's say, is 30, you're going to see there is a massive difference between the covered call, the shares of stock or covered call and to a caller position. Now, the biggest thing is when the stock actually goes down, stock position should be down about $500 and the caller should be down about $150. When the stock goes down, we're not thinking about the long put. We're thinking about maybe rolling the call only because that's the only side of the trade that needs to be administered to because there's a cap gain on that. The long put is really what's offsetting the stock position in losing more. Okay? Yeah, that's absolutely right. BJ says it was finger licking good last week. Yeah, it was. Yeah, sometimes news can cause things to move around. You're absolutely right. Okay? Now, I want to kind of go back to something just really quick. Just taking a look at something. Now, here's kind of the thing. When we look at the charts and kind of say, is the market bullish, bearish? I mean, someone says it's bearish. Kind of looks like it's sideways, okay? Now, when someone sees kind of more sideways type strategies, okay, the investor might say, look, I'm going to try to maybe do strategies that are a little bit more neutral on delta. In other words, maybe expecting it to stay in a range. Now, when you have a stock investor where all they want is the stock to go up and up and up and up and then complain that it's too high, now we know who those people are, okay? But the biggest thing is sometimes you get some consolidation, hence covered calls, hence callers, hence verticals, hence iron condors, things that are probably more time generating. Now, I just want to kind of point this out. If the VIX is going up, James, why do you talk more callers than covered calls? And it's a simple answer. Because if you're in a situation where volatility is going up, the time decay that you thought you were going to get you don't tend to get it on the short call because the VIX is going up. Time decay is actually that you got time bleeding down, but the volatility is going up and it's an offset. If you're sitting in a situation where the stock actually drops, the call premium doesn't protect you as much because that premium is holding higher because of the volatility going up. So if you actually think there's some risk of it really dropping, you might just use a caller like a covered call. Which of the two positions could you maybe potentially profit take on if there was a drop? The answer is the long put, okay? But the call you cannot typically grab a lot of gains from because the volatility is holding up the call premium. Took me a while to figure that out. I was thinking, covered call is going to be protected. Stock actually goes down $4 or $5. I'm like, I'm up 20 bucks on the call. How helpful was that? The answer is not. Okay. And the gains are, if you trying to take some profit in a pullback, the gains are on the long put to take potentially because the long put is positive vega. Okay. So your call, until that volatility comes back down, you're probably not going to see the gains that you really thought. No one ever talks about that. That's a huge point. Okay. Now, other questions. So in my mind, I kind of think about a caller like a covered call because it's a cap game. Okay. So, all right. Now, other things that I want to kind of point out. The one thing we actually saw, I'm going to pull up TNX CGI. One of the other things that we're actually seeing is as we kind of have the economy slowing from different reasons, different areas. Now, by the way, this is what's hard is one area of the country is not the same as other areas and vice versa. Okay. On this chart, what you're noticing is this is the interest rate for the 10-year maturity. And we're at 39.9. You can think of this as 3.99. And if we're at 3.99, you have rates falling, which probably means what could be going up? Well, just like a teeter-totter. If one side of the teeter-totter is going down, the rate is going down, the price is going up. That's one thing to kind of remember. Now, we don't touch upon that in this class, but it's definitely something to actually think about. If we actually see economic slowing, those bond prices, they're pushing up. Now, in terms of our world, stock investing, we actually see that, hey, could some of the real estate companies be benefiting from, let's say, mortgages or refinances, etc., that are at more favorable terms, meaning lower interest rates, potentially higher margins. What's the assumption there? That they could actually rent it for something that they actually maybe had before. Okay, that there's not demand compression from people that they're leasing or renting to. Okay, now I just want to kind of show this just real quick. Some of these real estate names are REITs. Okay, those have actually been swinging back to the upside. Now, by the way, the other thing Dean actually mentions as well, the smaller caps and real estate, they like lower rates, okay? They like the lower rates. And if we pull up the Russell 2000, yeah, the lower rates over time, these are smaller cap companies that borrow money at typically already higher rates to begin with. Why? Because they don't have that much money. Why? Because they don't have that much scale. Why? They don't actually bring in as much money, and the banks and the lenders deem them to be more risky to begin with, so they're already up against it when in terms of borrowing. They don't have the same capacity to borrow as JP Morgan, Apple, Home Depot, and so on. They don't have a balance sheet as big as that, okay? Now, if we take a look at this, I also want to go back to just kind of look at some other stocks just briefly, okay? We talked about the semis, mentioning that there was a couple stocks that were getting a little bit of a push, okay? Attention. Oracle, okay? Now, if we take a look at, let's say, Oracle, I'm going to come back to actually MU in just a second. Problem with my setup is 1, 2, 3, 4. There's 5 computer screens here, and I can look at all of them at the same time. Now, want to actually take a quick look at Oracle. Now, this is a little unusual move today on Oracle. And if you look at Oracle, you know, we've been kind of talking about a little push that might be happening on Oracle. Go back to the weekly chart for just a second. I mean, I'm not sure if we could say that this was bearish coming into this week. That's what it looked like last Friday. We go to the daily chart, and it's tried to push to the upside a couple times. That was an intraday high. That was an intraday high. Not a brand new high. That was an intraday high, but it just couldn't close there, okay? Now, let's go back to just real quick. We're going to do a paper trade on this, and then we'll come right back to Micron. We're going to go look at Oracle for just a second. And what you're now going to notice is, when's the last time that Oracle had an implied volatility of 55? It's okay to say it. The answer is it's been a long time. And if we look at today's option statistics, the highest that IB has gotten in the last 52 weeks is 69. Now, what you're now going to notice is the IB percentile, 67. So this is like a balloon that is pretty high right here. Now, when you have high implied volatility, you could get the spreads on the options to be wide as well. Okay? Now, by the way, the comment is, Lauren says, I had an alert on Oracle trigger this morning, but it fell down. Look, I think many of you have probably been watching that intraday little, that's why I said what I said, okay? It's kind of had where it kind of rallies and then fades itself a little bit, okay? And it has done that. Now, what I'm going to do in this case is, now notice the spread's a little wider, okay? We're going to right click on this. We're going to go sell vertical. And what we're going to do on that is we're going to sell the 300, buy the 290. We're going to try to get the mid price on those spreads. They are a little wider. I mean, the stock just went 5%, okay? Now, what we're going to do is going to say short put vertical in the IRA, max gain, max loss. There's the commission. Now, when you get something that knocks around like this, it might be harder to get a fill. Now, where did it get filled? It got filled at 350. Now, if we take a look at this, we're going to go back to, let's say, MU for just a second. Now, MU, that is the one that this morning gapped to the upside. Now, by the way, if you said, well, how would I know this for myself? One tool. Go to MarketWatch, go to Visualize. You go to Visualize and you pull this up and you could really see the crop. This is like you're flying 30,000 feet up and you're looking at the S&P 500 and saying, where's the crops, okay, of semiconductor stocks? And here she is, okay? Which of those ones are green? Now, the ones that are green, or the green is MU and ON, okay? Now, that also tells you, the market cap. It also tells you the percent change. So if we take a look at this, we look at MU, okay, we're talking about a $228 billion market cap. 200, so 1,000 million, 1 billion, 228,000 million, okay? Talk about 228 billion. Now, you look at something like Micron, you're going to see an extra comma in there. Talking about 4 trillion, the big one, okay? I mean, if you could just sell NVIDIA, you could almost sell off, cover a tenth of the national debt, okay? I don't know if NVIDIA is going to be willing, but maybe, okay? That'd be nice. Now, if we take a look at this, okay? Now, by the way, if you look at NVIDIA's market cap, you compare it to other countries' entire stock markets, it's amazing, okay? Now, what I'm going to do is here is on this one, we're going to make sure that MU is there. There it is. Now, if we said, James, I want to kind of play it from a long side where there's a higher potential upside, a higher break even. Well, we're going to go to MU. We're going to go not to the put side. We're going to go to the call side. Now, if we chose something like at the money, now notice the spread's a little wider as well. That can also be from the VIX as well. And I'm going to right click on the which strike, the 200, and do the 210. That has a debit of 455. If you said, James, I don't like that, that's a little close to the current price. If we did, let's say, the 195 and we did the, let's say, the 200. Well, if we did this, what you're now going to notice is or we could do the 205. We don't have the 205. Okay, so now what you're going to see is the 195, 205, not traded. So we're going to have to go, let's say, the 210. That's a little abnormal there, but I'm going to choose a little bit more conservative one, which is the Micron, the 195, 210. Okay, kind of had an interesting market here today, especially with some intra webcast Oracle push. Could it finally get that push and hold there? We'll find out. I'm out of my time here today. I want to thank you so much for your comments and your participation. Thank you to Connie as well for answering those questions in chat. Stay tuned for our next webcast coming up right at the top of the hour. We did a couple trades here today, kind of talking about adjusting positions, rolling, right? And we also talked about doing some vertical strategies and layering on callers on existing positions. Try to answer as many questions as possible. Why? Because your questions are important, okay? So with that said, remember with what we discussed, it was done for example, illustrative purposes only. We'll come back at the top of the hour and we'll see you in just a moment. Thank you so much. Take care. Bye-bye.